Hello everyone, after the blockbuster listing of Waaree Energies, we have got another high-profile IPO coming from Waaree Group between 21st to 23rd October. Well, Waaree Group needs no introduction. They already have two listed companies in the exchange. Waaree Renewables, that has been an exceptional wealth creator, and another listed company is Waaree Technology. Now, Waaree Energies, the new IPO, is the parent company of both Waaree Renewable and Waaree Technologies. Obviously, the solar sector has got massive growth potential in India with government plans like PLI scheme for solar sector and various schemes like PM Surya Ghar Muft Bijli Yojana, PM Kusum Yojana and so on. That's where solar sector companies are the hot favorite among the investors because of their extremely high earning growth rate in the last few years. And that is clearly visible from the grey market premium of Waaree Energies that command nearly 100% premium at the moment. It means just like Waaree Energies, Waaree Energies can potentially double investors' wealth on listing day itself. That would be a Diwali dhamaka before Diwali. Of course, provided you get the allotment. So be ready with all your Demat accounts and pray to God because only a few lucky folks would get this lottery. However, the more important question here is it worth buying the company post-IPO for further upside? For that, we need to understand the business model, future prospect, IPO details, financials, and valuation before and after the IPO. And the final part would be the key risk and growth thesis. And then we'll conclude that what should be the take on this IPO. Please note that this video is not to give buy or sell call. It is only for educational purpose. Kindly do your own research before investing your money. Alright, let's get started. So Waaree Energies is the largest manufacturer of solar PV modules in India with current installed capacity of 12 gigawatt as of 30th June. And then they have commissioned 1.3 gigawatt of solar module manufacturing facility at Noida. This slide shows the solar module annual installed capacity by companies in gigawatt and percentage share in FY24. Waaree Energies is leading with 17% share, followed with Renew Power that has 9% share, Tata Power has 7% share, Premium Energies 6%, followed with Mundra Solar which is part of Adani Group, Raisin Solar, Vikram Solar and so on. Now, I have already discussed the value chain of solar sector in my earlier videos on Premium Energies and NTPC Green. So I don't want to discuss it again. For details on value chain, you should watch these two videos. Just to quickly set the context, you have got raw materials like ingot wafer which are used for manufacturing solar cell, which is the most critical part of solar panel. And then solar cell is assembled with tempered glass, encapsulant, aluminum frame and so on to form the solar module. So currently, Waaree Energies fall into the solar module manufacturing category. Please note that currently Waaree Energies procure solar cells from Southeast Asia and China. And its PV modules are built on various cell technologies including multi-crystalline cell technology, monocrystalline cell technology and emerging technologies like TOPCon. And company has got 5 manufacturing facilities, 4 in Gujarat and 1 in Noida. Now company generate revenue from sale of PV module in both domestic and export market. In FY24, export contributed around 57% of company's revenue and remaining came from domestic market. Next, before we discuss the financials and valuation, let us try to understand why there is so much buzz around solar stocks. Friends, before we discuss further, now that we are in Q2 result season, I am closely tracking more than 200 companies to identify potential investment opportunities. So in case you like my analysis, you can explore my weekly video series that include one exclusive video every week where I discuss which stocks I am adding in my portfolio along with close tracking of quarterly results. You can get the details on my website or via the join button. Now moving on to the growth drivers, simple reason for buzz around solar stock is because it is a sunrise industry in India with massive growth potential. What are the growth drivers? First driver is urbanization and industrialization. Due to migration of people from rural to urban part of the country, there is more and more demand for power. Then growing middle class population with rising disposable income is fueling demand for appliances and improved standard of living. That again requires more and more electricity. Then modern factories rely heavily on electricity for machinery, lighting and temperature control. And as industries adopt automation and advanced technology, there is going to be more demand for power consumption. Then today we are living in the era of AI technology that processes humongous amount of data and that requires a lot of electricity. So urbanization and industrialization is the first factor that would result in massive demand for electricity. Then second growth driver is rise of electric vehicles. 21st century is witnessing a major shift from petrol diesel vehicle to electric vehicle. And as per estimate, there would be requirement for 20 lakh charging stations in India to cater to the scale of EV vehicle by 2030. Again, this creates a massive demand for electricity in the years to come. Third driver is government focus on solar sector. Indian government has a strong focus to reduce dependence on China and make India a global exporter of renewable energy. Government has already implemented the PLI scheme for high efficiency solar PV module with an outlay of 24,000 crore rupees. The scheme offers incentive to selected solar PV module manufacturer on the manufacturing and sale of high efficiency solar PV module. Plus, Indian government also levies various duties on imported solar cell and modules that effectively act as a protective shield for domestic manufacturer. Again, a key growth driver for domestic solar manufacturing sector. Fourth growth driver is massive solar installation plan of Indian government. Now, this slide shows the installed power generation capacity in India by fuel sources. In 2018, out of 344 gigawatt of power, coal contributed to 23 gigawatt, that is 65% of total capacity. Solar was 22 gigawatt. In FY24, power capacity increased to 442 gigawatt. Within this, coal contribution was 243 gigawatt and solar contribution is now 82 gigawatt. That's a growth of 25%. And as per reports, the total installed capacity would touch levels of 622 gigawatt by FY28. Out of this, 198 gigawatt is expected to come from solar. So that's another 24.7% CAGR growth expected in solar installation in the next 4 years. Then government has already launched schemes like PM Surya Ghar Muft Bijli Yojana that aims to provide high subsidy to Indian household for installing solar panels on their rooftop. This scheme is expected to benefit 1 crore household across India. So this growth from retail sector could be a big game changer for solar panel companies. Waaree already has a very strong distribution network across country with more than 380 franchise partners. Then fifth growth driver is solar has the lowest tariff rate across fuel sources in India. Now this is very interesting. In 2010, average cost of electricity supply was 3.6 kilowatt hour. That has now increased to 6.7 rupee. However, average solar tariff has significantly reduced from 11 rupee to 2.5 rupee. So comparing all type of fuel sources, average solar tariff in the country is even lower than many thermal power plants. This indicates a sustainable and viable future for solar energy in coming years. And sixth growth driver is China plus one. Every country in the world, including the US, is trying to reduce dependence on China that commands more than 80% market share across solar value chain. And India has emerged as a potential alternative because of factors like lower labor cost, favorable government policies for solar sector, and of course, huge consumption market with 145 crore people. That's where Waaree Energies, being the largest PV module manufacturer in India, is bound to benefit from these trends. Currently, Waaree Energies is sitting on an order book of 17 gigawatt against the annual installed capacity of 13.3 gigawatt. And this order book is expected to grow at much faster rate due to massive target of solar installation by Indian government over the next few years. Not only that, Waaree Energies intend to backward integrate with 5.4 gigawatt of solar cell manufacturing that is expected to commence from FY25. And then further expand the solar cell manufacturing by 6 gigawatt in FY27, along with raw material which is ingot wafer capacity addition of 6 gigawatt by FY27. In addition, company also plan to expand its PV module capacity by 1.6 gigawatt in FY25 and 6 gigawatt in FY27, taking total capacity to 20.9 gigawatt. This backward integration would help the company in improving their margins and profitability, and more important, it would help in reducing dependence from China. Another very interesting growth area is the use of green hydrogen and green ammonia, where Waaree Group has already got the PLI for 300 megawatt of electrolyzer manufacturing. So going forward, Waaree Group would also focus on green hydrogen and green ammonia. Now let us look at the IPO details. So Waaree Energy IPO window is between 21 to 23rd October and price band is set at 1427 to 1503 rupee. Minimum investment is around 13,527 rupee and lot size is 9 share. Company is raising 4,321 crore from IPO, out of which 3,600 crore is fresh issue of equity that would be used to establish 6 gigawatt of ingot wafer solar cell and solar PV module manufacturing facility in Odisha and general corporate expenses. And remaining 721 crore is offered for sale. Now let us look at the financials and valuation detail. So at an upper price band of 1503, company would command a market cap of 43,200 crore. And based on FY24 earnings, company would command a pre-IPO PE of 26. And post-equity dilution from fresh issue of equity, the PE ratio would be 33. The question is it worth paying a PE of 33 based on FY24 earnings? That's where we need to understand its historical growth. Now, we don't have much historical data, but since 2022, company's revenues have grown from 2,854 crore to 11,400 crore. That's an exponential 4 times growth in business in last 2 years. And net profits have grown multifold times from 79 crore to 1274 crore. Then company's margins have also expanded big time in last 2 years. On top of this, company has a very high ROE that has consistently grown to 30% in FY24, and ROC is also top notch at 26% in FY24. Plus debt to equity is negligible. So exponential growth, superior profitability profile and negligible debt in the past, coupled with high growth potential in the future, makes PE of 33 based on FY24 earning quite attractive. In fact, if we compare it with Premier Energies, which is also in same business, today Premier Energy commands a PE of more than 200 with market cap around 50,000 crore. In FY24, sales were 3,144 crore and profit was 231 crore, whereas Waaree Energy FY24 revenue is 11,397 crore and profits are 1,274 crore. So Waaree Energy is almost 4 times of Premier Energies in terms of business size, yet it is asking for a market cap of 43,200 crore. No wonder Waaree Energies is getting a grey market premium of 100%. Even after that, Waaree Energies would be cheaper than Premier Energies in terms of valuation. Now let us look at the final part, that is key risk in growth thesis. So first key risk is dependence on China. India does not have sufficient capacity for solar cells and there are no capacity for raw materials like polysilicon, ingots and wafer manufacturing. So there is huge dependence on China as of today. As a result, any disruption in supply chain or increase in pricing by Chinese companies can create major problem for the growth of Indian solar sector. However, after Waaree Group completes its backward integration plans, it would significantly reduce the dependence on China over the next few years. Second key risk is adverse change in government regulation. Please note that China is an undisputed leader in the entire solar value chain, and the scale at which Chinese companies operate, it is not possible to compete with them on price point. That's where Indian government has introduced the PLI scheme along with imposing a basic custom duty of 40% on solar module and 25% on solar cell to boost the domestic manufacturing of solar components in India. However, there is always a risk of removal of this PLI scheme and custom duty. If that happens, it would significantly dent the business of domestic solar manufacturer. Although I don't expect the Indian government to take such extreme measure, otherwise it would kill the solar sector of India. But there's always a risk of this removal of custom duty. Then third key risk is domestic competition. There are already many players in the sector like Vikram Solar, Mundra Solar, which is part of Adani Group, Premier Energies, Websol, Renewable Power and so on. So margin profile are extremely competitive. If competitors bid for lower prices, Waaree Group may also have to reduce their bidding price and that can impact their margins and profitability. Fourth key risk is technology risk for solar cell. So the technology for solar cell manufacturing is rapidly evolving with the launch of more and more efficient solar cells. And that's where Waaree Group also has to keep updating with all the advancement for the module manufacturing. Any failure in upgrades can potentially impact their business. And then fifth risk is concentration risk. Currently, Waaree has dependence on selected few customers where its top customer contribute 18% in company's revenue and top 5 customers have 48% contribution. So any loss of business from top customers can significantly dent company's business prospect. Although with the rise of retail solar rooftop business, this concentration risk should reduce over time. So based on our analysis, Waaree Energies is a fundamentally strong company with leadership in solar PV module. There is a massive tailwind in solar sector and Waaree is bound to benefit from it. Company has been growing at a very fast rate in last couple of years and already sitting on significant orders. In the near term, company is planning to backward integrate with manufacturing facility for solar cell and ingot, and that would further result in improvement in margins and profitability. Considering all these factors, company's PE ratio of 33 post dilution is clearly looking very attractive. There's already a massive grey market premium on listing, so it's a no-brainer, must apply IPO. The only question is, would it be worth buying post IPO? So post listing, if it doubles, it would command a PE of 66 and price to sale of 7.5. Even then, it would be much better as compared to Premier Energies that command a price to sale of 15 and price to earning of more than 200. That would leave further scope for upside post IPO. Having said this, we would revisit this company and decide what can be done post IPO. For now, Waaree Energies is a must apply IPO. I hope you got lucky. For now, Waaree Energies is a must apply IPO. I hope you get lucky enough to get the allotment. Now tell me in the comments, are you applying for the IPO or not? I'll see you next video. Till then, take care.